Hello traders, and welcome to the VantagePoint Trading Journal for today, Tuesday, September 25th, 2018. Hope you're having a great start to the week, trading and otherwise. We're going to show you how VantagePoint has been forecasting market movements and show you what you need to pay attention to. Today we are looking at Medtronic, MDT. As we can see, and even going out 3 months, basically any time that you've been able to rationalize a point where we can get in here with the bearish, the bullish crossover, here with the bullish crossover, here with the bullish crossover, every single time we got a bullish crossover. Now let's get this back to a little bit of a tighter frame. We got another one. So basically what I'm looking at, I call this a continuation buy, just basically looking for a tactical place to get in. So this is obviously a bullish sign. We're looking to get in. What we did see, if you are a straight stock trader, you want to look at getting in maybe around the $99. We're actually trading about 15 cents below there right now. Great place to get in. Always put in a protective sell stop, probably somewhere in the 97.5 area, 97.5 area. But we do have the bullish crossover. We have the predicted range above yesterday's actual range, and we have the neural index showing short-term strength that happened back on the 20th. All these things pointing to continued bullish momentum. So buying the stock, where we said around this area right here, or what we're looking at doing is looking at the October regular expiration 100-102 call spread, buying that for 50 cents. Most you can lose is what you paid in premium, 50 cents. The most that you can make is the width of the spread less any premium paid, which is $2 minus 50 cents. So the most you can make is $1.50. $1.50 of reward divided by 50 cents of risk is a 3-to-1 reward to risk ratio. So that's what we're looking at early on in this trading week, and I will be back with you later on in the week. Have a great trading week. Bye.